Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. I wanted to make a new recommendation tonight. This is a little bit different than what I've done in the past with the S&P, the market up 8 out of the last 10 days or 10 out of 12, whatever it is. We don't want to be chasing the hot dot. So I thought I would make a very solid recommendation with a really good reward to risk and a great dividend. So here we go. The recommendation tonight is to buy Abbvie. ABBV is a symbol. I think I pronounced it correctly. I've never been able to get it correct, even though I've owned it and sold it for many years. Anyway, here's the intermediate term chart, about 3.5 years long, and we have a horizontal channel here. Here's support, and here's resistance. So a market technician is going to buy at support and he's going to sell at resistance. And you could have done that a few times over the last couple of years and made good money. But we got a breakout of that channel in 2024, which of course is bullish. And it got off to a really fast start. And we got to a really overbought level on our RSI. And now we've had a big correction from 180 down to 160 or 164, let's call it. So, a nice correction and a nice entrance point for us. So the price projection based on this channel, you measure the width of the channel and project that distance upward, you come up with approximately 195, which is about 20% upside from where we're at currently. And I also want to emphasize the 3.79 dividend yield, which is very attractive. And so I'm going to put a stop here just below our confluence of moving averages at 155, give it a little bit of room. And with 195, our price projection, we have a little better than 3-to-1 reward to risk. And so I think it's very attractive. And for all the volatility we inherited for, say, copper for the 25% or whatever it was that we made on that, a lot of potential volatility. This is a quieter name and it's really out of vogue right now, healthcare, and it can act well even in a defensive market. So we have no negative divergence on our RSI. So this is all suggesting that we have one more high. One other thing that's suggesting one more high is the Elliott wave theory, which believes that trends go in waves of 5 with 1, 3, and then a 5th wave in the direction of the bigger trend, and 2 and 4 are counter trend reactions. So I really like the setup here. And let's take a closer look here at this right-hand side of the chart. And here we are. As prices got killed on the way down, you can see that our RSI is hitting higher lows. And so we're getting a positive divergence here as prices are coming down. The underlying RSI, which is measuring the strength of that decline, is lessening. So it sets up a pretty good setup for us. And you can also see that the Akamoto waves, which are not very thick here and actually have an opening here which prices could have less resistance to get through. That's what these signify. So that all looks good. And then if I look at the point and figure chart, we got a bullish trend line in place. We had a huge quote pull, which is 10 X's in a row or more. And you can see this was probably 20 or 25. So just not too long ago, this was a very hot stock. And now it's lost its luster and it's an investor's focus. And so it's given us a good opportunity to step in and buy. That's my recommendation tonight. 20% potential upside on the stock with a 3.79% dividend yield. You really should subscribe and like, especially subscribe so that you get these in a timely manner because it's really crucial to buy these